Hello and welcome to this economic and markets update from Luna Investment Management. My name is Alex Brandreth and I'm the Chief Investment Officer at Luna. It's been an eventful week or so with regards to the US election and also with the COVID vaccine announcements as well. So we thought it was important to give you an update on what's been happening within markets. Let's start with the US election. Already towards the end of last week and the beginning of this week, markets had been supported by the news that Joe Biden was to be the next president of the United States. There's a few different reasons why stock markets have welcomed the news. The first is after the event, we know some certainty. We know that Joe Biden is going to be the US president for the next 4 years. We're also a lot closer to US stimulus being announced. Before the election, it was agreed that any stimulus plans would be delayed until after the election. And a US stimulus for the economy is one of the biggest out there. It's over $2 trillion. So it's going to have a significant impact on the lives of individuals, but also on the overall economy as well. So that's an important development. Clearly, with Joe Biden being president, the prospect of future trade tensions with China is lower. We don't think this is going away, but the way that it's dealt with is potentially going to be less hostile than if the man on the right hand of the screen would still be US president. Now, there's still a lot that's to be decided. There's clearly a lot of legal challenges. We're going through different states. The Senate has not been confirmed yet. There's 2 seats that are still up for vote, which will be going into runoff in January. So we won't know if the Senate is likely to be Republican or Democratic. However, early indications are that it will be a Republican Senate and a Democratic president. So still a lot to happen over the course of the next few months or so. Clearly, there's also been some significant developments with regards to a COVID-19 vaccine over the last week. And it was announced on Monday, the 9th of November, that Pfizer and BioNTech have successfully created a vaccine which is 90% effective. Importantly, that is better than most had anticipated, and also as well, it's going to be distributed very quickly as well. In the UK, it was announced by the Health Secretary that it's likely to be early December, and Prime Minister Boris Johnson has also said it's going to be before Christmas. So it's going to be available to the most vulnerable of society in very quick order, which is excellent news. Now, that is excellent news both from a societal perspective, but also, of course, for stock markets. And this caused a big surge in stock markets, particularly the stocks that have been most at risk and weak over this period in 2020. So the travel and leisure stocks saw big bounces, Carnival Cruise Lines, for example, EasyJet. As well as this, you saw a large bounce in the oil price as well, which was up 8% on the day that it was announced. This had a significant impact on the oil majors, BP and Shell, which their share prices increased as well. The ripple effect fed through to the financial sector, to the property sector, and it was an overall positive period for the market. It wasn't just the UK, this was a global theme with US markets higher and European stock markets higher as well. In fact, European and UK stock markets bounced more than others because they've been more under pressure through 2020. The US is already close to all-time highs, whereas the UK FTSE 100 is still 20% lower in 2020 because of the pandemic. It's going to have a significant impact on global growth as we move through in 2021. Some scientists have said that it's most likely that life will return back to normal in the spring within the UK. And as we move through 2021, there's going to be a significant rebound in economic growth globally, not just the UK. And this is because there's been significant pent-up demand during 2020 because of the pandemic. People haven't been able to leave the house. People haven't gone on holiday maybe as much as they would have done in 2020. So this pent-up demand is going to come back and have a significant impact on global growth in 2021. It's not just individuals, it's clearly going to have a significant impact to companies as well, and particularly property-related businesses where rent has been lower because of the fact that tenants haven't been as present in the office, and there's also been clauses to delay rent payments as well. This is from the JP Morgan and their guide to the markets. This overall should be a positive dynamic for stock markets as we move into 2021. We've removed two of the big uncertainty that's been overhanging in September, October, the markets, the US election and COVID. Therefore, we're moving into a much stronger stock market environment in 2021. And in fact, some of the strongest periods for stock markets are when you're in a recession, but you're coming out of recession. We saw this in 2009. The stock market bottomed in March, but we didn't come out of recession until the end of 2009. So there's a 9-month lag between the stock market bouncing and the economy coming out of recession. It's likely that this is going to be such a shorter period because of the fact of the way this crisis has been more shorter and sharper, but it's going to be a significant period for stock markets as we move into 2021. That's a quick summary on where we are on the key events. It's clear positive news for stock markets from both the US election and COVID, vaccine, which has seen markets perform very strongly in the short term. However, we expect this trend to continue through into 2021. Thank you for listening today.